Hey guys, welcome back. In today's video, we are talking about the AMC earnings, the option breakouts, and many more in this video. So many of you guys will know that earnings is out for AMC. As you guys can see here, third quarter 2024 summary results. So the total revenues was 1,348 million. Net loss was 20.7 compared to net earnings of 12.3 for Q3 of 2023. Adjusted EBITDA 161.8 million compared to 199.9 million for Q3 of 2023. Net cash used in provided by operating activities was 31.5 million compared to 65.9 million for Q3 2023. Cash and cash equivalents at September 30th, 2024 was 527.4 million. So there's going to be multiple things that I want to talk about in for the earnings of AMC because it is very important. Now, a quick look and again, the Q4 results at a glance, what we have to see is that the revenue has beat the consensus and again, the EPS has beaten the consensus as well. So what we have here is they achieved a new record for third quarter admissions revenue per patron, realized adjusted EBITDA in this just completed quarter that was in line with the pre-pandemic third quarter of 2019. Expect that industry-wide box office market rise at year end and rise yet again for the next 2 years. And again, of course, the cash and cash equivalents is at 527.4 million. So two things we have to note straight off the bat. Now, we can see is that in comparisons to Q3 of 2023, we obviously haven't improved. In fact, we are obviously going down where we see the net loss is 20.7 as compared to the net earnings and also the adjusted EBITDA. First, we have to understand is that, of course, there were things that affected for 2024. And again, these weren't the same factors that were affecting back then in Q3 of 2023. Like we said, like we have to understand is that there was a consensus given and we have actually beaten those consensus. So that's already the good part about this. But again, we have to be strictly brutally honest in terms of understanding what's actually going on. But you can see Adam Aaron has actually said, I'm almost euphoric about the vital improvements lodged at AMC Entertainment during the third quarter of 2024, with our achieving two important milestones in what has been a long road past post-COVID recovery. First, on solidifying our financial metrics, and despite our net loss, our adjusted EBITDA posted in the third quarter of 2024 was the second best performance of any third quarter in AMC's 104-year history. So here's the first thing that we already have to understand. And so it's understanding that they are obviously improving. And like we've said, this is ultimately what the key point for AMC should be. You can also see what's more in this third quarter, AMC's total revenues were 31% stronger than our revenues of Q2 2024. Our net loss was narrowed by 37% compared to the loss in the second quarter of 2024, and the adjusted EBITDA was 4 times stronger than that of Q2 2024. Like we said, again, in comparison, what we have to understand was that there were factors that were affecting 2024 that wasn't affecting AMC back in 2023. And you can already see how AMC from quarter to quarter, we are improving. We are able to obviously sail through the tough storms. And that's exactly what we want to see. One of the biggest things that we obviously talk about on this channel is essentially just understanding is that AMC doesn't need to be making billions and billions of dollars right now in terms of profit. It would be extremely good if they did, but that's not what we kind of are looking for right now because we know that it's a step-by-step process. At the end of the day, ultimately in the long term, that's what we want. But right now, what we want is for the fact that AMC needs to be able to survive. AMC is at least showing improvements. They're showing that their managements are getting better, and that's exactly what they are doing. The reason for this is because we obviously talked about the only way for short sellers to get out of this is if AMC were to go bankrupt. And so for AMC to go bankrupt, they need to be showing bad fundamentals, and that's why we care about the fundamentals. It isn't for the fact that we aren't seeing AMC making billions of dollars yet, but its understanding is that AMC is able to survive, and that ultimately is what's important for us, and that's exactly what they are doing. This is a direct result of the greatly improving industry-wide box office throughout the third quarter, which we expect will continue going forward. And second, on the strengthening of AMC's balance sheet, our debt transaction announcement in July pushed the maturity of $2.4 billion of our long-term debt out into the future for several years, from 2026 to 2029 and 2030. In addition, so far this year, AMC has further reduced our outstanding debt in total by some $349 million through our capital market efforts, including debt buybacks and equity exchanges. And that obviously brings on to our next understanding. And like we said, survivability is ultimately what's important for AMC. We want them to do well, but I stress on the importance of being able to survive. And one of the things that people were saying that was going to bring AMC to its downfall is obviously the debt issue. But like we've seen, AMC has been doing a lot, pushing the maturity of 2.4 billion back. We've seen how they've reduced the outstanding debt by 349 million. All of these things are what's allowing AMC to survive. And like we said, we don't need to be seeing AMC make billions of dollars right now. We are seeing AMC improving throughout different factors, wherever it is from what they're doing in terms of investments, wherever it's what they're doing with how they're restructuring their debt. These are all things that are allowing AMC to grow, that are improving AMC. And that is what we want to see. And that's exactly what they are delivering. Aaron continued, during the third quarter of 2024, we are proud that AMC also achieved a new record for our third quarter admissions revenue per patron and an all-time record of any quarter for our food and beverage revenue per patron. It's especially encouraging that because we have worked so hard to put in place operational and financial efficiencies, we realized adjusted EBITDA in this just completed quarter that was in line with the pre-pandemic third quarter of 2019, even though our attendance in this just completed quarter was 25% lower than the same quarter in 2019. Now, I think again, this is something that has been highlighted in all of my videos recently, and it's understanding the fact that with the way that AMC is operating right now, they don't need a bigger box office than before. They are able to make the same, if not more money, with a lower box office than what we've seen in the past. Now, obviously, again, we want the better the box office, obviously the better for us. The bigger it is, the better for us. And so this is not me saying I don't want to see a bigger box office, but this is me saying that we have to understand that AMC is able to put themselves in a position where even if we were to experience a low box office in the future, we are still able to operate at an extremely good margin. And that's what, like we said, that's what we want to know. That's what we want to see, because we're not here just for the next month or two for AMC. We have already been on this play for 3, 4, and again, continuously going to be 5, 6, 7 years. So we don't care about what's going to happen to AMC in a month or 2 months. And so when we're investing for the long term, this is what we want to understand, is that in the case of an emergency where in the future we are seeing some bad things happening, AMC is still able to improve. But yeah, pretty much that is it for the earnings that we talked about. And again, you can see admittedly some of third quarter metrics of 2024 were behind those of last year. However, we believe of much greater importance is our bullishness about the impressive movie slate that is coming to our theaters in November and December of 2024. So expect a very good Q4 earnings, or at least expect the box office to go up and AMC to be able to profit from that in the Q4 of 2024. Now, going on to some things. So before the earnings, prior to the earnings, people were already excited and people were expecting AMC to do well. And you can see here a few bullish option traders ahead of the AMC earnings print in 90 minutes, where we are seeing the volume coming in. And these are all, of course, call options for AMC. But not only that, we can see AMC has popped up on whale feed with a 100,000 share order for $460,000. If they beat earnings tonight, folks, strap in. Now, the thing that I wanted to warn people about, and again, none of this is ever financial advice, so do take out as a grain of salt, make sure you do your own due diligence and research, but it's understanding what good earnings mean for AMC, or what just earnings in general mean for AMC. Because if you take a look here, now we've just analyzed AMC's earnings, and yes, we talked about how some aspects they weren't better than Q3 of 2023, but they beat Q2 of 2024, they beat the consensus, but yet we're seeing AMC at 433, and this is what we talked about. This is their way of making people scared and worried about AMC. Like we said, I've always expected AMC to go down despite what earnings we are seeing. In my video yesterday, I talked about AMC could be making $1 billion or billions of dollars in profit today, but they still will find a way to manipulate and talk bad about AMC. And that's exactly what we are seeing right now. When you take a look at the kind of the other competitors in the market, whether it's Cinemark, whether it's IMAX, you can see how they've obviously profited from the earnings, or in terms of how their value has reflected because of the earnings earnings. But in this case, AMC is not, and there's a clear reason why, and this is what we've always talked about in the past. And now a quick thing about the debt is that you can see Coca-Cola 50 billion of debt, Budweiser 78, Target is in 12 billion of debt. Just a reminder, AMC is in 4 billion in debt, which is pushed out to 2029 and 2030. So this is just the understanding, is that debt isn't always a bad thing. The reason why people continuously use debt against AMC is because that's all they have. And 4 billion debt does sound like a scary thing, but when you understand what AMC is doing with the 4 billion, when you understand how AMC is attacking this 4 billion, then you understand that there is nothing to be worrying about. And that's why we talked about, in terms of understanding why AMC is obviously good. Now, another reason for why we saw the price go down is because AMC has actually had a breakout, the volatility squeeze pattern. Now, obviously take this with a grain of salt. Again, this is with the technical analysis, but what we have seen is how AMC was obviously doing extremely well in terms of recovering from this bottom, which we have talked about, and we made a video about understanding how this was obviously the bottom. But you can see this breakout was intended because we are going back into that range consolidation range, and if we saw another breakout, the price was obviously going to go up even higher, but they needed to suppress it because they can't afford to have AMC break out. And you guys, thanks for watching this video. I'll catch you guys next time.